Hello everyone, this is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, August 18th, 2025. Well, last week as we previewed, we had some very influential economic data that came out during the week, mostly inflation related, and it started off great during the week and then Thursday, not so much, but we'll just start from the top. Last week, Tuesday, we had the CPI inflation rate, both the headline number and the core number. In terms of the month over month, both the inflation rate and the core rate exactly as expected. The inflation rate was up 0.2% month over month in July, and the core inflation rate was up 0.3% month over month, so as expected. However, the only number that really varied was the inflation rate year over year, due to rounding, actually came in at 2.7 versus 2.8, and we're a little surprised, but the equity markets absolutely loved it. So big day on Wall Street on Tuesday. That was great. 2 days later, we had the PPI, the producer price index data that came out, the core and the headline number, and it was much worse than anyone expected. So the PPI, both the core and the headline number, expected to be up in the month of July 0.2%, and both came in at plus 0.9%. So speculation, just connecting the dots, very likely something to do with the fact that we had disruption, supply chains, all due to Trump's negotiating policy regarding tariffs. So we're not really sure what it is, and we'll see how this flows through, but the markets really hated it, and it's understandable. This is sort of the pig in the python, if you can use that analogy. Simply, once you start seeing inflation hit at the producer level, very often it gets passed on to the consumer, so there is concern about that. We'll certainly watch that. Maybe this is a 1 month aberration, maybe not, but a 0.9 month over month was just way more than anyone would have expected. I doubt any economist got this right. So Thursday, the gains that we had on Tuesday certainly wiped out. Same day, Thursday, initial jobless claims slightly better than expected. Expected was 228,000, came in at 224. And then news on Friday, although it was in line to slightly negative, given what we had on Thursday, was actually taken pretty well. And that's retail sales and retail sales ex-auto for the month of July was posted. Month over month data were both in line. So the retail headline number was up 0.5% month over month, which is what was expected, but nonetheless, very strong. You back out autos, it was still for the month of July plus 0.3%, so that was good. Last bullet point for the week was the Michigan Consumer Sentiment Index, and consumer sentiment has been certainly a downward trend over the last year, and then we had a bit of a recovery for a couple of months, and it really took a hit here for the month of August. The expectation was 62 reading for the Michigan Consumer Sentiment Index. It came in at 58.6, so definitely negative. Now, rolling up all that information and taking a look at what the Atlanta Federal Reserve, how they reacted to it, they yawned. Their expectation remains third quarter GDP in the U.S. a positive 2.5%, which I'd have to say at this point would be very welcome. I think most market participants expect lower than that, but nonetheless, 2.5% is what the Atlanta Federal Fed govs think we're going to grow in terms of GDP. Inflation expectations have been creeping up. Now, this is nothing large. The numbers aren't huge. Nonetheless, the last 2 months has been an upward trend. So we hit a level of 2.38%. Again, if you just look at it by itself, that's fine. 2.38% is a built-in expectation for inflation over the next 10 years. But it's coming up from numbers just a couple of months ago that were in the mid 220 range. We have a Federal Reserve meeting in September 17th, I believe is the date. The expectations of a rate cut, it decreased a little bit last week, but expectations are high that we are going to get a rate cut. So 83% is the built-in expectation now. It was 86 just a week ago. And same thing for expectation of Fed rate cuts cumulative by the end of the year. The odds of 2 or more rate cuts dropped a little bit from 88% to 83% at the end of last week. And the probability of 3 cuts by the end of the year, that also moved down to 37%. It had been 45% the week before. So with all that news, we'd have to say from an economic standpoint that producer price index number and Michigan consumer sentiment, negative. How did equities do last week? It's actually a pretty good week. S&P 500, we'll call it up 1% for the week. But the thing most encouraging of that last week was that the equal weighted S&P 500 was up 1.5%. So that simply means that the Mag 7, the gains have been outsized for them as it has been for 2.5 years on a year-to-date basis. But last week, certainly greater breadth in the market, which again, for our portfolios, for our clients, we think is encouraging. So last week, growth underperformed value, small cap outperformed large cap. So those are good things. On a year-to-date basis, growth still better in the U.S., up 12% to 8.25 for value. And the same thing for large, up 11.5% on a year-to-date basis, and small up 6.73. International markets, I said the U.S., S&P 500 up about 1%. International markets up even better. Developed markets ex-U.S. up 2%. Emerging markets up we'll call it 1.5%. And both of those indexes up quite a bit more than the S&P 500 on a year-to-date basis. On a year-to-date basis, S&P is up 10.6%. Developed markets ex-U.S. up 28.7%. And emerging markets up 18.7%. In terms of fixed income last week, there was a little bit of weakness in treasuries, not big, but the Bloomberg U.S. Aggregate Bond Index nearly flat last week, just down 2 basis points. And just to reiterate, very strong year-to-date return on the Bloomberg U.S. Aggregate Bond Index, up nearly 4.4%. So this week, in terms of economic activity, all housing related, well, 3 of them, the 4th one being initial jobless claims. Expectation in terms of building permits, housing starts, existing home sales for the month of July, not much change expected from the month of June. Won't bother mentioning it. Initial jobless claims, the expectation is will rise a little bit from the prior week. Last week reported 224,000. The consensus for this week, 226,000. Well, that's it for our economic update this week. Thank you very much for attending. We'll look forward to seeing you next week. Thank you.